If you are thinking about investing your hard earned money, that means you are already ahead of the game as an NRI living in the UK. But let's face it, navigating the complex world of investment can be daunting, especially when you have relocated to a new country and become a non resident Indian. That's why having a clear and effective investment strategy is crucial to your financial well being. In this video, we are going to explore how to invest safely and effectively using one simple fund or ETF that can transform your financial future. So let's get started. Hello and welcome to my channel. My name is Suman and I am NRI living in the UK. I am a doctor by profession, so by no means I am an expert in finances and investments, and I am not qualified to offer any financial advice. I moved to UK from India almost 8 years back and have faced the same difficulties around managing my own money as you might be facing now. On this YouTube channel, I share my own experience and learnings about how to manage my own money so that it helps you to manage your own money better. Please do consider subscribing to my channel if you want to see more videos on similar topic. For those of you who have been following my channel, I have recently done 2 videos about how to start investing in the UK and how to choose best investment platform. I have provided the links to those videos in the description box below in case you have not watched them yet. This video is third part of the series where I will discuss what to buy in your stocks and shares ISA in case you are a complete beginner to stock market investing in the UK. If you want to do equity investment, you can either buy individual shares of the companies that you think are going to make great future returns. But what if you are wrong and the share price of that company goes down in future instead of going up? In other words, by doing direct stock investing in a few shares, this exposes you to a lot of risk. So how do you overcome these challenges and create an effective investment strategy? The first step is to diversify your portfolio. Don't put all your eggs in one basket and spread the risk across different asset classes, geographies, and sectors. Okay, that sounds good, but for 90% of us who are watching this video, direct stock investing will not be the preferred option because we will struggle to create a well diversified portfolio of individual stocks. Majority of us, including me, simply don't have the time and the skills to pick winning stocks consistently over long periods of time. Also, there is enough evidence which suggests it's extremely difficult for even professional fund managers with all the resources available to them to beat the market in the long term. If they can't beat the market, what is the chance that me, who treats asthma, COPD, and lung cancer patients in a hospital, has to look after a family at home and have 100 other different commitments, will be able to generate market beating returns by doing direct stock investing? I think it's zero. So what can I do then? I can invest in a collection of shares, also known as funds or ETF, so that even if few companies go down in value, there will be other winning stocks which will make up for this loss and my overall investment will go up in value. Now the question is how to choose this collection of shares or funds. Either you will pay some expert fund manager to do this for you. Of course, in return, they will charge a fee for their services. This is called active investing. This is usually a costly option as the fee will add up over many years and form a substantial amount after decades. But If the fund manager is good and is able to consistently beat the market, then it's worth paying the fee for higher returns. Another option, also known as passive investing, is to choose an index fund or ETF which tracks the market index based on a certain geography or theme. For example, the S&P 500 is a stock market index that measures the stock performance of 500 of the largest companies, which actually includes 503 shares listed on stock exchange in the United States. It's widely regarded as a strong indicator of the overall health of the US stock market and the economy. So if you invest your money in this 503 shares, then the chances of you losing money over the long term is quite low, and it's almost zero over a 20-year period based on historical data. By the way, past performance is not a reliable predictor of future performance. For this kind of index investing, we don't need to pay a clever fund manager, so the fees is quite low. In my opinion, this is the preferred mode of investing when you are starting out as a beginner. So by now, we understand that if you have to choose one fund to build your portfolio, that one fund will be an index fund. So the next question is which index fund to buy. Here there are two popular options. Either buy the S&P 500, which is US index, or buy a global fund which includes all the major economies like US, Europe, Asia, Japan, and the rest of the world. USA is the global economic superpower, so whichever option you decide to buy, US will remain the majority of your holding. If you look at the historical data, over the last 20 years, US markets have dominated over the global markets. Historically, there have been instances where the global markets have done better than the US markets. So it's really difficult to predict what will happen in the future. If you want to include all major global economies and the possibility that US may not be an economic superpower in the foreseeable future, then it's best to choose a global fund. So that's what I'm going to do. But if you want to just invest in S&P 500, that is still a good option. Okay, so we have decided to invest in an all world fund. Let's see what are the options available for this. I am going to search on Invest Engine platform. This is my preferred platform for ETF investing, and I maintain my own stocks and shares ISA on this platform. But you can also search this in whichever platform you have an account with. I will type all world, choose equity, and we are going to choose the accumulating option for long-term growth of capital. I am not interested in getting an income as dividend at this stage. The first option that comes is Invesco FTSE All World with the ticker FWRG. The total expense ratio is 0.15%. It is quite cheap. The next option here is Vanguard FTSE All World with the ticker VWRP, and the expense ratio here is 0.22%. I will go with the cheaper option, which is the Invesco All World Fund. This fund has given 21.88% return over the last 1 year. The major holdings are Apple, Microsoft, Nvidia. If we look at the geographical distribution, North America, including the US, consists of 61%. Europe is 11.6%. Japan is 5.9%. Asia, excluding Japan, is 5.3%. This includes China, India, Taiwan, etc. Emerging markets is around 5%, UK forms 3.9%, and the rest of the world is 3.1%. This fund is well diversified across different sectors of the economy like industrial, technology, financial, consumer durable, healthcare, etc. So, this single global fund is a good option to invest across the global markets without paying a lot of fees. Similarly, there are some other options like ETFs that you can find on other platforms. For example, the HSBC FTSE All World Index Fund Accumulation C Class. This fund has an expense ratio of 0.13%. Another example is Fidelity Index World Fund P Accumulation with a ticker code of FIAAGM. It has an expense ratio of 0.12%. I have provided the details of these funds and the affiliate links to the investment platforms which I use personally for my own investment in the description box below. I hold both the HSBC and the Fidelity Index Fund in my ISA and LISA account respectively. This video is not a recommendation to buy those funds and I am not providing a individualized financial advice, but this video is going to help you to understand the thought process behind choosing an investment product to build a big portfolio. Please do let me know which global funds you are investing in the comment section below. Don't forget to check out my other video where I have discussed about my investment portfolio. Thank you for watching. See you next time.